The price of gold just spiked and hit an all-time high. What's happening? What's next? Interest rates are starting to shift lower. Looks like this economy is beginning to really sort of cinch up. So interest rate expectations are that they go lower. How much lower? We'll probably have to wait about 6 months until we get the final picture. The Federal Reserve is going to want to wait until inflation hits about 2%. Given that, they may leave interest rates higher for longer. So the big surge in gold may be short-lived for right now. Let's jump in and I'll show you some of the charts I'm looking at. If you're just joining me for the first time, thanks so much. I just launched this channel. I have another channel I've been running for a couple years now. This channel focuses on the economy and stock analysis. Stock market analysis, you kind of need to understand what's going on with the economy to understand what's going to happen with the stock market. Here we're looking at gold. Anybody that's been following me for a minute knows that I love silver. What I end up doing is I step into the market and I sell calls, sometimes puts, depends on which direction the metal's moving. I take that premium, let those calls or puts expire worthless, and then I take that premium and I buy the actual physical coin. I have a few coins sitting around, we'll say that. In the meantime, the big move higher in gold, I had been following it, that it had been creeping up a little bit higher, a little bit higher, a little bit higher. Seems that individuals are really starting to rush into gold, and also cryptocurrencies. Of course, Bitcoin and Ethereum are moving higher. A lot of the currencies are. Those are the only two that I really pay much attention to. I have a lot of Ethereum, ETH stock, or ETH coin. So with lower interest rates, the thinking is gold will see lower carrying costs, and therefore the price can move higher. You don't get any yield out of owning gold. What I do is I took that lump sum, put it into one account, and then I sell those options. So that's kind of my yield, if you will. My initial investment in that coin in silver, once I put it in that, I said, that's it. Now I want to earn a certain percentage every year. So I step in and I sell those options, and that's my yield. And I continue to buy more and more coins as time goes by. But I don't add to that investment. That portfolio, that account has a set number in it. I'm going to leave that. And I just sell those options, bringing in money, buying coins, and that's how I look at it. Here you can see the monthly chart on gold. This chart goes back to the late 1980s. And as you can see, there's been some decent moves higher over the course of the past decade. A lot of this has to do with the money supply expanding the way it is, inflation. A lot of this all started when Nixon got us off the gold standard for our money. So we have broken up to a little bit higher. A lot of technicians would look at this and say, to the moon. There's some fundamental analysis that would actually sit there and say, yeah, probably move higher. It is moving higher, and there's really not a lot of reason for it to move lower at this point. Let's first look at, here's a long-term look at the price of silver, and as you can see, it didn't really participate in gold's surge. I think really what happened back in, say, 2010 was more of an anomaly, and that silver does have the ability to kind of challenge its most recent highs, but not its all-time highs. Although if we saw $50, I'd probably be taking a bunch of coins somewhere and dropping them off, waiting for the price to drop back down. Then I'd buy those coins right back. So silver and gold both moving higher. What is the cause of this? U.S. Treasury yield. Backing off from its most recent highs. This is the most recent surge in gold, but the bigger move is something far bigger overall. The money supply, which is basically inflation. Now, the Federal Reserve is going to try and restrict inflation. A couple key things. They don't care about employment. We're waiting on employment numbers this weekend, Friday. The Federal Reserve does not care about that. They've made it clear that they will get inflation down to 2%. And this is key because this also means that with inflation or with interest rates as high as they will be, Gold probably has it wrong for right now. M2 money supply is the next thing you want to take a look at. If the Federal Reserve restricts economic growth for a significant period of time to shrink the growth rate of the money supply, while also targeting 2% on inflation, gold eventually will probably come back downward because the carrying costs for interest rates being higher for longer will prolong, and individuals will start to sell off their gold assets. Eventually, if the Federal Reserve can restrict economic growth, the money supply, and inflation to the point where it's more trendline, this will in fact probably force gold to correct downward. In the meantime, this Friday's news release, we're expecting that, given some of the information we got this morning, what we'll probably get on Thursday with employment numbers, more than likely it's not going to look good, which is great news. Interest rates will probably fall, which means gold price will probably spike a little bit higher. The eventuality is that the trend line will get back online. Federal Reserve is going to leave interest rates higher for longer. So eventually I expect gold to peak, then start to sell off as the economy restricts from what the Federal Reserve is doing. So for now, if you are long gold, and actually going into Friday might be a good trade, simply because if the bond yield does fall, gold will go higher. Make sure to hit that like and follow button to follow along with these kinds of aspects of the economy and the stock market. We'll see you in the next video.